Is the bull market over? Here's why it might last until 2038. Many people believe the bull market is coming to an end. But what if I told you it could last until 2038? That's exactly what Tom Lee, a well-known financial and crypto analyst, suggests. His theory? Demographics drive markets. If we analyze past market cycles, major crashes could be predicted 40 years in advance by simply looking at birth rates and immigration patterns. Why demographics matter in market cycles? If we examine past crashes like 1929, 1974, 28, and 2018, they all coincided with significant demographic shifts. Markets tend to peak when the largest generations hit their peak spending years, between 40 and 50 years old. According to this model, we are nowhere near the next peak yet. If history repeats itself, the next major downturn could be decades away. While most investors panic over economic fluctuations, demographics suggest a different reality. Lee believes the market could continue growing for years, presenting massive opportunities for those who understand these cycles. The Federal Reserve and market manipulation. The Federal Reserve plays a crucial role in shaping the economy. By raising or lowering interest rates, it tries to balance inflation while maintaining employment stability. However, here's the issue. Economic stimulus packages have been significantly reduced, and consumer spending is slowing down, impacting businesses. And the bond market signals that rate cuts are overdue. Now the big question, will the Fed cut interest rates in time to prevent a collapse? Market sentiment and the role of contrarian investors. There's a concept in investing called contrarian thinking. When the majority expects the market to move in one direction, it often does the opposite. Right now, bearish sentiment, investors betting on a market drop, has surged to 59.2%, nearing historic highs. This could indicate two things. The market may crash sooner than expected. We could be at the perfect buying opportunity before another rally. Volatility and the VIX index. What's next? The VIX index measures market volatility, how much prices fluctuate. When the VIX is high, it signals uncertainty and fear. When it's low, it signals stability and confidence. However, investors can trade volatility itself using VIX contracts, allowing them to bet on market movements. Currently, the market assumes that volatility will decrease in the coming months, but that might be a trap. Why? When volatility is low, investors feel safe and start taking bigger risks, making markets more fragile. If an unexpected crisis occurs, the market could drop suddenly, like falling off a cliff. The role of China, tariffs, and global trade tensions, geopolitical factors are adding fuel to the fire. China's aggressive policies are causing uncertainty, and tariffs are making imports more expensive for U.S. businesses. And tech giants like Nvidia and Tesla are facing increased regulatory pressure. Despite this, Lee doesn't believe the bull market is over. In fact, he sees Tesla and Nvidia's recent stock drops as short-term setbacks, not long-term declines. The small-cap dilemma? A buying opportunity? When small-cap stocks, smaller companies, have dropped 19% since their November peak. And yet, some sectors, like healthcare, finance, and industrials, are performing well. Lee suggests that fear is driving small-cap stock prices down, making them undervalued opportunities rather than warning signs. Gold versus Bitcoin. Which one is the best hedge? Lee proposes that if cryptocurrencies reach the same market value as gold, the price of gold could double. Why? And gold is the traditional safe haven asset, and crypto offers massive growth potential but is highly volatile. If crypto becomes as widely accepted as gold, investors may rotate back into gold for stability, driving its price even higher. Meanwhile, Bitcoin is evolving into the backbone of a new financial system, and it's unhackable, and it's a powerful remittance tool, and it survived 14 years without being replaced. Once major banks like Goldman Sachs and JP Morgan fully adopt Bitcoin, its trading volume could skyrocket, making it one of the most profitable assets in finance. Will the Fed cut interest rates in time? The biggest risk to the economy is how the Federal Reserve handles interest rate cuts. If the Fed raises rates too aggressively, it could cause a recession. If it waits too long to cut rates, inflation could become uncontrollable. Investors are watching closely. If the Fed cuts rates in May, it could provide temporary relief for the market. But if they delay, the market could be in trouble. Final verdict. Is the market safe or at risk? Lee remains cautiously optimistic. His demographic model suggests that a major crash is unlikely until at least 2038, and historical trends indicate that market peaks align with predictable demographic cycles. Investors should focus on long-term growth, not short-term fear. But remember, markets don't crash slowly. They drop fast and hard. Right now, all eyes are on the Federal Reserve and rate cuts soon. Will they step in to stabilize the market, or are we on the edge of something bigger? What do you think? Will the bull market last another decade, or are we headed for a crash? Comment below. Like, subscribe, and turn on notifications for more market insights. #stock market, #bull market, #investing #. Bitcoin #crypto, #gold financial freedom, #wealth building, #inflation, #interest rates, #money mindset, #economy. And what this version does, keeps the entire content intact while making it more structured and readable. Enhances SEO and clickbait appeal with engaging headlines and keywords. Adds clear tastes, calls to action, to boost engagement. Maintains a professional but exciting tone for YouTube audiences. This is the complete version, ready for use. Let me know if you need any final tweaks.